Hi, and welcome everyone to yet another episode of Digital Success Exchange. We have with us today Mr. Richard Leftley, Executive Vice President of MicroInsurance Company. Richard started his career in microinsurance back in January 2002, sorry, my bad, at Opportunity Network, while, while he led the establishment of MicroInsurance 2006. Richard has served on the steering committee of ILO Microinsurance Innovation Fund, a 35 million fund provided by the Gates Foundation, and also had served as a member of MicroInsurance Network Board. Very interesting topic today. We are going to discuss digital innovation in microinsurance driving financial inclusion. But before we begin, here is a short introductory video. Hi, Richard.
Hi, and I
Welcome to the
love that
show.
photo. It makes me look like I was about 20 years younger.
Yeah. Like while we are stepping into 2022, looking back at 2002 is like long back. You have had a journey of 22 years.
I used to have
Amazing
I used to have
experience,
a
I
full head of
suppose.
hair like yours, and yeah, it's all fallen out. Yeah.
But then with that experience, if you can just give us a small introduction of your journey, we can take it from there.
Sure, no problem. So, I mean, I got started in 2002 because simply I was fascinated by why it was that the man and the woman on the street didn't buy insurance. I mean, insurance companies have been around in India for decades, and yet,
Yeah,
97% of the population doesn't have insurance. So there was
true.
clearly something broken, and so that was what motivated me to get going. To see whether or not insurance was something that we could sell to the mass market. Started off working initially in the microfinance sector because that was just the easiest, the kind of lowest hanging fruit in terms of reaching the mass market, but also combining insurance with other financial services, which made sense. And then in 2009, had a breakthrough with the mobile phone companies, which brought really massive scale. In India, we signed up 20 million customers in just 140 days, with a
That's awesome.
telco. So that gave us really massive scale, and then went into the kind of payment banks and the mobile wallets with companies like Airtel Payment Bank. And then, from there on, kind of started to work with ride hailing, food delivery, e-commerce. So we've always been a company, or I've always been focused and been part of a team on providing insurance to the mass market.
That's okay. So I'll start at 2002. Okay.
Sure.
So because insurance and financial inclusion, the definition has changed over time, right? Especially financial inclusion. 2000, back in 2002, it was like we're stepping out of dot-com era and stepping into the internet, the mass internet era, right? And obviously that changed the face of financial inclusion. Before we step into that, if you can give a small understanding to our audience, what to you is financial inclusion?
Well, I mean, it's interesting. If you trace back the origins of financial inclusion, it actually
Yeah,
has its roots in the microfinance movement. And before microfinance, it was really called microcredit. So
yeah,
actually, it's always been, I mean, the baseline, the bedrock of this thing called financial inclusion has always been about lending money to low income people. Right. And
right,
then we have added other financial services. So it went from being microcredit to being microfinance when there was a move towards introducing savings and to a lesser extent insurance. And then I think people realized that um, there was also remittances, there was also kind of payments, digital payments, and enabling digital payments was a really important kind of component. And so, I think now we have a much better idea, a much broader picture of the wide range of financial services. People need loans, they need savings accounts, they need to be able to receive remittances, they need to be able to make payments seamlessly, but they also need the safety net which insurance delivers. And in many ways, insurance is like the safety net that moves up underneath people so that as they work their way out of poverty, when disaster strikes, it means they don't fall back to the bottom of the pile. It's also, I think, so it's one of the most needed, but it's also the product which no one wakes up wanting to buy, right? So
Exactly.
everyone wakes up every day thinking,
Yeah.
okay, I would be happy to take a loan. I'd be delighted to receive a
Yeah.
remittance. I can kind of understand why I need a savings account, but no one wakes up wanting to buy insurance. So insurance has always
Yeah.
been the difficult one, the slightly ugly child in the family, if you don't mind me saying
Yeah.
so.
The innuendo of trepidation.
Yeah, I mean, it's a really, no one really wants to buy it, right? So it's always the hardest one to sell. And you have to sell it. Insurance is not bought. No one wakes up wanting to buy it. So this is definitely a product you have to sell to people.
So right. So when we talk about how microfinance, so you said that financial inclusion came up along with microfinancing, right? Starting with the Dinert credit card that started off in six, right? But if we see, as I said, insurance is something where people always had trepidations. So it has always followed up on financial inclusion, microfinance. So how have you seen micro insurance growing from what time? Because insurance has been there for bigger companies. Insurance as a umbrella, what can I say? Protection has been there for bigger organizations for always. Micro, we need to start including the mass in it. So
Yeah.
has it changed?
Yeah, so I mean, I think we, so I mean, this was where I started, right? So
Yeah.
2002, looking in
Yeah.
from the outside, insurance companies have been around for many decades. In fact, I think LIC had
Decades.
been around
Yes.
for nearly 100 years at that point, right?
Yeah.
And yet, and yet 97, I think back in 2002, I mean, this is 3 years before Facebook, right? So,
Yeah.
this is quite early. We still got gray screen phones. Broadband is still very much through dial-up. So it was very early on in the digital kind of journey. But basically, what we did, or what I did, was I started off by simply kind of asking the question, which is, what are the barriers? Why is it that people don't buy insurance? And I think I found a number of things. I mean, I think there was a number of things, and we could probably talk all day. But basically, they boil down into a few kind of key areas. So one area is that insurance products were overly complicated. Okay, if you buy
Yeah.
insurance, it's got many pages and pages of wording. And so the first thing that I did was I tried to simplify the insurance down into its most basic components. So I wanted to
Right.
get to a point where the insurance could be explained in a single text message, right? So 160 characters, and so instead of having life insurance where it's a 12-page booklet, it's just very simple. If you die, then we're going to give you this money, right? And then, so simple products is one aspect. The next aspect, which is kind of linked, is also in relation to kind of the friction that is involved in signing up for and using insurance. So I think a lot of people's experience is that it's very difficult to sign up, it's very difficult to pay the premiums, and it's very difficult to make a claim. And so
Yes.
we had to kind of remove friction from that, because what it felt like to me was that we weren't really competing with AXA or AIG. We were competing with apathy. We were competing with, I can't be bothered to go through this process. So, I think I mentioned to you that product where we signed up 20 million customers. Actually, what
Right.
actually happened was we were signing up, we had offered this insurance through a mobile phone company, and we were asking for three questions. We were asking, what's your name? We were asking, what's your age? And we were asking, what's your next of kin? And what we discovered was that 80% of people couldn't be bothered to give us these three pieces of information. So 80% of people weren't completing the sign-up process. So we had to kind of like go back to the drawing board and say, if we remove these three questions, how does it change things? Well, what it means is that we're going to have to offer insurance which doesn't have an upper age. Most insurance says you have to be between 18 and 60 or 18 and 65. Well, what happens if we don't ask someone's age? Then we can't restrict the age of the product. And so we might end up with a few people who are 90. Is that a problem? Well, it's not a problem if you sign up 20 million people, because if you sign up 20 million people in India, the average age is going to be what? It's going to be 25 years old, 26 years old,
25
because
years old.
that's the
Yeah.
average age of the population, right? So,
Yes.
so
Exactly.
we had to ask the question, which is, if we make it really simple to sign up for everybody, we will capture a few 90-year-olds. But in the process, we'll also capture 19.5 million or 19 million kind of 25-year-olds. That's got to be good news. So it's about having that mental agility of having a very simple product with a very frictionless customer journey. And those were the key breakthroughs that really enable us to reach tens of millions of people in a country like India.
Right. So before we go into the product part, I have a habit of going back to our discussion where you said that you have onboarded 120 million people in Go insurance, microinsurance, right? So when we talk about financial inclusion, lending, savings, as you said, is pretty well defined in the head of, like, in our head, right? We understand that, okay, this is something we are getting, it's credit. Now with insurance, what comes up essentially is the awareness, the education, that why do I need an insurance. Primarily, if you see for younger generation, it has always been a question for them that at this age, why do we need an insurance. So when you said that 120 million got subscribed in a go,
I know.
and the average age,
I said 20 million in 140 days. Yeah.
okay,
No, but
okay,
still
20
20
million in
million. Yeah.
20,
Yeah.
still huge.
Yeah.
20 million in 140 days, right? How did you drive the awareness? Because for a generation of 25 years old people, average age of 25 years old, willing to onboard on insurance is pretty big deal.
Right. So
How has
actually,
that been?
yeah, no, absolutely. So I think it's true that I mean, let me put it like this: if you stand on the street corner today and say, "I'm
Yeah,
selling life insurance,"
yeah.
everyone will just brush past you. No
I
one,
think
no
that
one
has
will stop.
become LIC.
That's LIC, right? Exactly. Actually, LIC doesn't sell insurance. LIC sells actually a savings product, which is called insurance. So that
Yeah.
actually, when people sign up for LIC, I don't think that they're signing up for an insurance. I think what they're signing up for is
Long term
I
savings.
give you 50 rupees, a month or a week, and in 5 years' time, I can buy a motorbike. That's what people do when they go
Exactly.
to LIC actually. Um,
Yes.
so anyway, so LIC's been clever. They don't sell insurance; they sell savings accounts.
So
And actually,
pointing.
that's also going to be my answer. You see, if you stand on the street corner and say, who wants life insurance? No one will take it. But if you stand on the street corner and you say, who wants their children to finish schooling if something bad happens? Then there will be a line of people who will say, I'm interested. Or if you stand outside a construction site and say, which of you wants me to keep sending the money back to your family if something bad happens to you on the construction site? Then there will be a lot of interest, right? So what we discovered is that you don't sell insurance to people. What you do is you need to address the risks that they worry about. So how will my kids finish school? Who will send money to my family? What happens if the screen on my phone breaks? How would I continue to work for Uber or Ola or whoever, right? And so these are the things that people worry about, but not because they want to buy insurance, but because how it would inconvenience them or how it would affect people that they love. And so what we did is the breakthrough for us was realizing that no one was going to buy insurance from the microinsurance company or from whoever we were, right? And so what we needed to do is we needed to partner with an organization who had a very strong brand. And so
Right.
strong brands in India are things like the telcos, the banks. Why? Because people regularly use their telco, right? So if you buy airtime from Airtel, if you buy airtime from Jio, if you buy airtime from, and then you load it on your phone, it works and it just works. And you do this every 3 days, you do this every 5 days. And so every 5 days, it underlines in your head that if you buy something from Reliance, it will work. And so when that brand turns around, okay, to you and says, I'm going to make it very easy to sign up. All you have to do is put in a short code, right? Send a short code. Then you're signed up. That's it. And then I'm going to collect the money from your airtime balance, right? So I'm going to take a few rupees or a few minutes of airtime from your airtime balance in the same way as ringtones have been sold for many, many years in India,
Right.
right?
Right.
People, and so it's very painless, right? I'm signing up for a product, but I'm paying for it in tiny, almost unnoticeable amounts of money every day. And it's related to a situation that it concerns me. It's related to a situation like, how will my kids finish school, or who will feed my family if I lose my job or have an accident or something like this? Then then that's where you get these breakthroughs. So we're not selling insurance. We're partnering with other people's brands. We're making it very easy to sign up. We're making it very easy to pay. And we're addressing emotional issues that people feel when they wake up in the morning. These are the things they worry about. And that's how we've
Right,
had the breakthroughs. We don't sell insurance.
right. So now coming to the product development part, sir. So if you see financial inclusion, primarily when we talk about financial inclusion, is generally lending, as I said, micro lending and all. So there has been a process of product development in their field, right? Over the time, financial inclusion before, say 2012, 2013, it was still a difficult job. But with the advent of what can I say, companies like Paytm, smaller, uh, where people can easily access lendings, it has become a mainstream particle right now. So how has insurance been able to go along with it? How has the product development journey for micro insurance been?
Yeah, sure. So, I mean, when we first started out, we spent quite a lot of time, in the
Hmm.
field, sitting with the target clients, trying to understand what they wanted, what they needed. And what we came to learn was that these activities for us actually had very limited kind of benefit because I'm afraid to say, no one, with the people we were talking to, 85%, 90% had never had insurance. So it was like asking them, okay, do you want to go on holiday to Hawaii or Los Angeles? I mean,
Hmm.
they'd never been outside of India. So how would they know, right? Um,
Right.
and so asking them what kind of product features they want in their insurance product, they don't really know, right? So all we could ask was, what causes you to spend money in unexpected ways? So what when you think about yourself or you think about people in your community, what's happened in the last 6 months, in the last 12 months, which caused people to spend like large amounts of money in unexpected ways? And what you always heard was, no one knows they're going to die. There's the cost of the funeral, there's the how do we pay for the school fees, there's all these other things. So there was like, no one knows they're going to have a road accident. There was no one knows they're going to get hospitalized, with COVID or
Hmm.
something like this. So there were things that happen to the individual, typically accidents,
Hmm.
typically death, typically hospitalization. And then separately there was things that happen to their belongings, like no one knows they're going to drop their phone, or no one knows that you
Right.
know no one knows that there's going to be a fire in their kind of community that wipes out their small stall or their business location. And so these are the things that we kept hearing. These are the things. And so what we did was we used that information to help to design products. But actually, trying to go one step further and ask people, what do you think of this product or what do you think of this product, wasn't very productive. So what we did
Right.
was we designed the product kind of almost on paper. We launched the product, and then after 6 months we then asked the client base, what do they think of the product? And that's when we got good information, right? um,
Right.
so we discovered that you have to sometimes launch a product and then ask people what they think, and then go back and use that information to redesign the product.
Right. Right. So this is sort of a question. It's not a question. I have wondered this for a while. So we talk here, right? We talk about how would your family be uh, compensated when you are not there. That is one part of insurance. The other part of insurance is like, what happens if you lose your phone? What happens if you lose your umbrella? What happens if something breaks, like your TV breaks, or your stereo breaks? So how I see is like the smaller products, it's easier to make people understand, okay, this happens on a this is a short term thing, you get a return, right? So intent is higher there. So that is where I think my embedded insurance is helping micro insurance grow. On the
Right.
other hand, this is where I want to, or this is where my question lies. When we talk about life, when we talk about accident, uh, like physical accident on people, on human beings, not on materials or gadgets. How does micro insurance drive? So the premium obviously varies very very differently, right, for both of them. So how do micro insurance address that part?
Hmm. I mean, I think it's kind of interesting that after 20 years, we've developed 200 products across a wide range
Mm.
of different risks. And yet
Right.
80% of what we sell, the majority of what we sell is still accidents, life, so funerals, hospitalization. It still makes up 80% of what we do because this is what people are worried about. And in fact, the one thing
That is good stats.
yeah, it's really interesting, right? So
Yeah,
because
really interesting. I didn't think that.
I think what people buy is what they think is the highest risk, because we're dealing with people who, for every dollar or for every rupee they earn, they could probably spend that rupee twice over, right? So if you sat
Right.
down someone and you said, okay, Ankan, tell me, like, you earn 100 rupees, and then write down on this list all the things that you want to do with this 100 rupees. I want to go grocery shopping. I want to put my kid to school. I want to, and they list out all the things. It would be at least 200 rupees, maybe 400 rupees. So for every
Right.
100 rupees they earn, they have more things they would like to do. And
Aspirations, yes.
aspirations. And so, if they are going to buy insurance, they're not going to buy insurance for something which might happen in 10 years or 20 years time. They're going
Right.
to buy insurance for things that they're worried about, like hospitalization, because hospitalization happen,
Hmm.
right? They're
Right.
interested in screen damage, because actually 12% of phones get the screens damaged every year in India. So, you know, one in 10, more than 1 in 10 people will smash their screen this year. And that's a problem when your phone is basically your business, right? Like, if you can't see where the
Hmm.
guy is, then you can't pick him up,
Yeah.
or, so these are things that people worry about, and therefore they're much more likely to be willing to buy that kind of product. And that's why we focused on those things. And I think this is also one of the mistakes that I think the insurance industry, the mainstream insurance industry, is actually headed in the direction of trying to select and cover the risks which are truly catastrophic. So they want to cover the office building falling down, or
Yes.
the jumbo jet falling out the sky. Whereas what
Right.
the man on the street wants is his phone, or
Hmm.
or something which and so there's this kind of there's a danger that the insurance industry is moving towards the infrequent, catastrophic, and actually what the man on the street wants is the frequent and cash flow. That's what they really
Right.
want,
Right.
and that's what we're trying to do as the microinsurance company, is trying to fill that gap.
If I understand correctly, I would say microinsurance is primarily a push towards improving the man at the corner's cash flow.
Exactly, it's about providing that safety net, which
Hmm.
when because I mean, like, when he gets cancer, or when he gets when some disaster bestows him, we know that at the moment the man running that corner shop is going to use all of his savings. He's going to borrow money. He's going to sell assets. It's going to have a dramatic effect on his financial well-being, right? And he's going to do that because that's what you do, right? India
Hmm.
will find a way. We were talking about this earlier, um,
Yeah.
and and yet it has a huge impact on him and on his children and on generations to come. There are stories, I mean, of people selling children into
Yeah.
slavery for these kinds of things. That affects the next generation. So,
Yeah.
if we can avoid them doing this because we put a safety net in place, then we save a generation, right? This is a major change to financial inclusion.
That is very well put, Richard. Now let us go to the other end of the stick. We have been talking about how we benefit the man at the corner, and how we avoid him not falling in the trap of uh, their cash flow being running out. Now the risk on the other end comes with how to assess the risk as a company. If, for example, I'm a micro insurance company, how so okay, I'll frame the question in a different way. India, when you're talking about India, that there is a dearth of cash in hand for people, correct? It is a country where 100 rupees is a earning of a day for a person, less than that sometimes. Now, for those people, how do you assess risk? Because it's all about business.
How do we assess the risk, right? Is that what you
Yes.
mean? Like,
How
how do we
how
assess it?
assess? So yes. So for a bigger insurance company, assessing risk for B2B is quite straightforward.
Yeah.
But
So,
then
so,
for
so
microinsurance,
actually,
how do you assess the risk?
I think this is really critical, right? For me,
Yeah, yeah,
for me, the key driver to price when it comes to these
mm,
products is not the risk
right,
element. It's the cost of
okay,
selling the insurance and servicing it, which you have to get under
okay,
control. So,
okay,
if you think about this, when you take an insurance policy and you downsize it, right? So you downsize the
mm,
benefits and you downsize the premium. To some extent, if you just keep doing the customer journey in the same way, so come to my office, fill
mm,
out this form, you know, all the things that are done in the traditional way, the cost of administering that
right,
insurance doesn't actually scale down, does it? Right? And so, if you take a policy if you take a traditional insurance cost 1,000 rupees and you just take a zero off, so now it's 100 rupees, the cost of
yeah,
administering it doesn't reduce in a linear fashion. And so you have to address that, right? Otherwise, you're really in trouble. So what we've been doing is, actually, it might surprise you, the key success for us is getting on top of the customer journey, because then you make it easy to sign up, you make it cheap for the client, you make it easy and cheap for the client to sign up, but it also make it easy and cheap for you to administer a product.
mm,
So by removing questions like what's your age, well, if you remove the question what's your age, then when you come take a claim, I don't have to ask you, show me your age, show me your death certificate, because I don't care, right? I don't care how
right,
old you are. So then suddenly I've reduced my cost of administration dramatically as well, right? So all of these things go
right.
hand in hand. Do you get my point?
Mm. Yes, yes, yes. This is a very, very particular way of looking at it. Thanks. This was a very critical question I had in my mind, because we all talk about financial inclusion as a rosy picture. Now, when it comes to the how you run profitability on driving financial inclusion as a company, it becomes a very critical way of thinking.
Actually,
Right.
what might surprise you is that the
Yeah.
lot, and this always, and people always don't understand this, right? This is always,
Okay.
people misunderstand this. The
Hmm.
losses that we see from the mass market are less than we
Hmm.
anticipate. There is actually an underreporting of claims. So everyone always assumes that someone who's poor or middle
Yeah.
income is fraudulent, or that they're high
Hmm.
risk. Actually, what we've discovered is this isn't the truth. Okay, they actually have
Okay.
less. They have
Yes.
less accidents. They have less. They go to the hospital less, because basically, if you think about it, like they're literally living on the edge of on the edge of existence, and therefore they're very
Existence.
risk
Yes.
adverse. They don't do risky things. They don't
Yes.
get drunk and get on the motorbike. They just don't.
Yep.
They can't, right? So actually, they're a better risk. And then and what we also find, and this is actually a problem for us, is that they don't report all the things that happen. So it's quite common that they forget that they have the insurance, because with financial inclusion comes this issue or this obligation to make sure that people understand what they're buying. And so we actually do
Hmm.
quite a lot of education to remind people that they have the insurance, and to encourage them to come
Right.
forward to make a claim.
Right. And that drive further drives the penetration rate.
Yeah. I see there's a
Yeah.
bunch of questions. I don't know if you want to go at some of
Yeah.
those.
So yes, I'll get into it. I just have one question, I think, which will be very pertinent to the startup people who are watching this. Uh, so we have moved from bespoke products to mass products, from mass products to SaaS products. Now we are moving from SaaS to micro SaaS.
Right.
How does insurance companies or micro insurance companies, who startups working in this segment, can leverage this understanding to deliver better micro insurance to the mass through SaaS
Okay.
products?
Sure. So what we discovered, I mean, so when I started the company, I was an insurtech. Okay, I was a broker. I was an
Right.
insurtech. Um, and a few years ago, we became a reinsurance company. So a few years ago,
Oh,
after many years of being an insurtech, we transitioned and said, okay, let's go the final distance and become the underwriter. Okay, become the reinsurance kind of company that would underwrite
right.
these products. But we
Reinsurance
not
carrier.
only
Yeah.
underwrite the products, but we also provide the IT. So in many countries, we actually
Okay.
work with these startups who, for example, in East Africa, I give an example of Kenya because it's not India, therefore there's no competitive issue here. But
Mhm.
we work with a number of startups there, and what they come to us and say is, look, we've got these kind of really interesting ideas, but the local insurers won't underwrite the products because they're new products. There's no data,
Mm.
there's no information. They don't want to take
Right.
a chance. So it's
Right.
very hard to get the traditional insurers to underwrite the product. But they also say, for example, we want to do like a usage-based insurance. So like motorbike taxis, they want to have insurance per ride. In order to do that, you need to have technology
Mhm.
because you have to keep track of, okay, exactly when
Exactly.
was the ride happening, etc. Um, and so what
Right.
we've done is we've underwritten the product. So we've become the provider of the product, but we've also provided the IT that we've developed for ourselves free of charge to those insurtechs so that they can then go and get started. And the reason that we've done this is because it's almost like an investment for us into those startups. We want them to succeed because we think that they've got really innovative
Right.
ideas, and therefore we want to be partners with them. And so our investment is the provision of the insurance product, but also the provision of the IT. We don't get anything in return for it. We don't get equity. We don't get, but we just we provide it free of charge because we want them to succeed. Because in turn, microinsurance is the key challenge for us is distribution. It's about reaching the last
Exactly.
mile and reaching people. And the insurtechs, that's
Exactly.
exactly what they're great at doing. And so if we can provide them the product and the technology, it sets them free to just focus on the distribution problem and to fix that problem. And that's what they've been doing. And we'd love to be doing the same there in India with any of the startups listening in today. Love to talk to you about what products you need, what IT you need, and how do we support you on that journey. So, sorry that that's a plug, but that's the truth. So,
No, totally works. I think that's the way of going. I think partnership is the way in future the business is going to prosper.
yeah, has to be.
Every company can go to the last mile, right?
Yeah.
Very well put, Richard. Now I think it's time we can go to the audience questions. So the first question we have is, how do you think we can be able to redefine the meaning of microinsurance from being a product with a small cover and low premium to an affordable insurance policy to protect the financial need of the backward community?
Yeah, I think it's a really good question. I mean, so in India, microinsurance
Yeah.
actually has a legal definition, right? So microinsurance is actually a kind of, it's defined by the regulator as to what the product is in terms of the size of the
Right.
insurance, the size
Yes.
of the premiums,
IRDA.
etc. Yeah, I mean, actually, just to clarify, I mean, I know we're called the microinsurance company, but actually, it might surprise you. So we're
Mhm.
interested in serving anyone who doesn't have insurance. So we're actually interested in the middle income market and also the micro market. The product that we just
Right.
launched a product this week. We actually launched it in the EU, in Austria,
Mhm.
right, which is not a poor country. So it's kind of interesting. We're serving people in the
Right.
US, we're
Yeah.
serving people in the UK. These are not poor people. These are gig workers. What we learned was, okay,
Right.
so what we learned is that actually, if you learn these lessons of simple products and frictionless customer journeys, and you learn it in India, you learn it in Africa, actually these same things are needed in the EU, in the UK, in the US. People want these simple products and they want these frictionless customer journeys, especially in the gig worker segment. So this is what we're doing. Okay.
Right.
Now, so back to the question. So I think I'm not quite sure I get the question, but I think, yeah, I think what it might
I
be
think
getting at
it's
is
from
how
an
do we go to
education
like,
perspective, I suppose. Yes.
yeah, I think so. I think it's also kind of like, I think a lot of what happens in India under the microinsurance banner is really kind of the NGO mindset.
Mm.
And actually, and I don't think that
Yeah.
works. I don't think that people want to be treated in that way. I think what they want is a product that works
Mm.
and that is also affordable, right? And I think that might be the thing that's underlying this question. And I totally agree with that. And that's exactly what we've been doing. We're a business, we're a social business. We want to make profit. We do make profit. And we're interested in serving
Right.
the unserved, the 97%. That's the poor people as well as the middle income market.
Right. 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 Well put, Richard. Let's go to the next question. InsurTech is highly dependent on data sourced from all available digital sources. Do you think InsurTech in this regard be able to effectively increase financial inclusion among the lower rungs of the society who has limited access to smartphones in the developing nation? So,
Yeah.
how do you penetrate with the limited access of smartphones, to be precise?
Well, yeah, I mean, I think it's a really good question. It's kind of interesting because you see,
Yeah.
we're a B2B player, right? We don't go directly to the consumer. We've always worked in partnership
Right.
with banks, with microfinance, with telcos, with whoever, right? And so we're always reliant upon our partner to give us whatever data. Of course, we get some secondary data, right? So we get some secondary data that relates to the products that we sell, but we don't, we only get primary data if the partner is willing to give it to us. And what we found is that partners really aren't willing to give you very much data. So it's not uncommon for the telco to refuse to give
Oh,
you even the person's mobile phone number. All you get is the last 4 digits, unless someone makes a claim, in which point then you find
oh,
out who they are. But only like you don't
right.
discover who these clients are. So I think it's I mean I get where the question is coming from. I think data is very, very powerful. But what's amazing to me is that a lot of what's going on at the moment in the industry is actually not being led by good data. It's actually just happening irrespective of data. So what we've done as an industry is say, we'd love to have the data. If you gave us the data, it'd be much better. I mean, I'll give you an example. We were
Right.
working with
Okay.
with like a payment bank. Okay, it wasn't in India; it was in another Asian
Right.
country. And this payment bank,
Right.
it was owned by a telco. The telco had 50 million customers, and they had this wallet,
Okay.
and virtually I think the take up was like 30 or 40 million people had the mobile wallet. Okay, so 40 million people using this wallet, and the wallet had all the normal stuff like buy airtime, send money, pay utilities, and then it had
Right.
insurance, right? And it had a kind of like an insurance, and the payment bank invited insurance companies to put the products on the shelf, right? You bring your product, put it on my app, you can leave it there, people will come and buy it. Out of 40 million people, 2 people a month were buying insurance. So if you digitally put insurance on the shelf, no one will buy it. So what we did is we went to the payment wallet and said, okay, tell me the people that paid the school fees. Tell me the people that on a Friday send the money back to their family. And then we'll send them a message saying, hey, if something happens to you, do you want your kids to finish school? Or hey, if something happens to you, do you want us to keep sending money back to your family? And you know what? 50,000 people in month one bought insurance. So we took it from 2 people to 50,000. So where organizations do give us data, we're able to drive sales. But often we find that we have to survive in an environment without data. And then we just have to design products that are one size fits all. Here's a product. We don't know if you're a man. We don't know
Right.
if you're a woman. We don't know how old you are. Here's a product. And so that limits what we can do. Yeah.
Right. 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 So yeah, I agree. I think it's all about. It's more about selling. Is more about understanding pain point, and data would be more about customer experience here.
Mhm.
Right. So we'll go to the next question. India mostly has an agent-driven distribution model. Okay, this is a very good question, I think. India mostly has an agent-driven distribution model for selling microinsurance, right? It has traditionally been agent-driven. And the incentives being provided to microinsurance intermediaries are quite low. Should these be considered as challenges? If yes, then what should we do to increase the adaptation of microinsurance and financial inclusion among the rural population? Like how to move over the agent-driven distribution model?
So I think it's a great question. And actually, I agree with the question, which is that in India, microinsurance has, especially LIC, has predominantly been sold through agents. Um, I
Yeah.
think that it's one of the main reasons why insurance hasn't taken off in India as compared to other countries,
Yeah.
because there is this model and people have been trying to use it. And it doesn't work for products that are not those kind of long-term life policies, say a 5-year life policy, because the cost of the agent is, even though the commission is low, it's still quite, so the cost of the agent drives up
Hi.
the the cost of the product, right? So you can't afford to sell
Right.
you can't afford to sell many of these microinsurance products via an agent because the agent won't justify himself.
Through agents.
So what we've
Correct.
done
Right.
in other countries is that we have gone down this B2B or B2B2C route of partnering with organizations like telcos, banks, etc. That is not agent led. What it does is we either embed the product into into the client's kind of core business, or we sell it as a bundle, or we sell it as a standalone driven by data. So for example, we've worked with these digital platforms to try and give them a differentiator, right? So if you take my SIM card and you top up more airtime with me, then you get this free insurance. If you take my payments wallet or my payments bank, you open an account and you use it, you make at least 2 or 3 transactions a month, then you get this kind of free insurance, right? Or bundles, so here's data,
Bundling
here's Netflix,
insurances.
here's some COVID insurance, right? This has been very popular.
Right.
Or the data-led example that I gave of this, that I gave just a few minutes ago, where we convinced the organization to segment their client base so that we can target these segments with different kind of clients. And so what we're doing is that we're actually leveraging the brand of the telco or the bank or the ride-hailing company, right? And then we're positioning a product using that brand, and we're using their payment mechanism to remove any friction from the collection of the premiums. And that's how we've got these kind of millions of people to sign up. But it's not an agent-led approach. So I think actually the agent-led approach, it's not going to be the way that you're going to mobilize insurance to the masses. I think we've seen that time and again.
Definitely, we are afraid of those agents.
Yeah.
Half of the time, I think people just there has become a certain kind of mentality that whenever an agent comes, it has to be an LIC, and he's going to pitch something which is going to be 10 years old. Anyways, so the education has also become, and the thought process has also become like that it should come from a very different channel now.
Yeah.
Right. So I'll go to the next question, Richard. Reports suggest that there's a lack of reinsurer. Okay, this is where I think you would come in. Reports suggest that there's a lack of reinsurer for products that cover informal sectors here in India. What are your suggestions to overcome this challenge? Are there any experience you had with the same in UK or on any other countries that you've worked with?
Absolutely. I don't know who asked this question, but I literally could give them a hug, because actually, it's almost a perfect question. Yeah, there is. There is you've hit the nail exactly on the head. There's a lack of, so the local insurers in India, and I won't go into this, I think the local insurers in India are very dynamic, but they're not very interested in the microinsurance sector. And there's a lot of reasons for it. I've spent years trying to understand it. I can't go into all the details.
I think we addressed that in the previous question.
Yeah. So, and so one of the ways around this is to bring in a reinsurer, right? So the reinsurer says, I am interested in this, and therefore what I'm going to do is I'm going to partner with a local insurance company. I'm going to go to the local insurance company, and I'm going to say, so it's almost like the reinsurer would partner with an insurtech, for example, or with someone in India who had an idea. They would develop the product between themselves and the customer journey and whatever IT was needed. And then almost as a last step, they would go to a local insurer and say, guys, I know you don't want to underwrite this product, but you guys issue the policy and then reinsure the risk. So just pass the premium and pass the risk offshore to a reinsurer, okay? And then to this reinsurer, and they will take the product, they will take the risk, and take a small fee for handling the product. This model is actually very common in many countries, and this is actually how microinsurance has got a bit of a foothold in some countries. And that's the model that we are working with as a company. We're actually setting up a Lloyd's syndicate in London to underwrite exactly this risk. And one of the reasons we're doing it is because it's the only way to offer reinsurance capacity into India, because the Indian regulator has very strict restrictions on who can reinsure business, and Lloyd's of London can. So Lloyd's of London has a license to offer reinsurance into the Indian market, and that's why we're setting up a Lloyd's syndicate. So we're hoping to be live on the 1st of April, and we'd love to work with people, even starting now, because 1st of April is not very far away. It will take time. Yeah.
I think we'll all be looking forward to that. So I think we have just left out 2 more questions, Richard. What, according to you, would be the next big microinsurance in terms of monetary value? People in India would be willing to avail, like mobile, laptop. What would be the next big?
The ones, there's a couple that I'm seeing. I think screen damage is very much at an early stage. I know phone insurance has been there for a while. We've come up with a very simple product, which is just, if you crack the screen, then you just get some money. You don't have to send your phone away. You don't have to go somewhere. You can literally just take a photograph of the screen. You send us the photograph and you receive, say, $20, $30. And then you choose where and when you get your screen replaced, right? So then
Right.
whatever's convenient for you in terms of timing and location, you can just go and get it fixed. So you just get the money, and then whether you fix the screen or whether you don't fix the screen, we don't care. So what it is a very simple product. Show me that you've cracked your screen. Here's $20. You choose whether to fix your phone, and if so, when and where. The other products I think are kind of like, I'm going to call them cyber, but they're not really kind of traditional cyber. So this is more like, where your phone becomes blocked. So maybe you pick up a virus or you get hacked, or your payment bank details get kind of compromised and your bank account gets kind of compromised, or where your phone gets kind of bricked, like where your phone becomes like useless because someone just, you refuse to pay the ransom. So I think restoring people's identities, restoring people's financial kind of records, removing kind of credit issues for people, that's going to be a really big, all our and I know you're going to find this strange, but even in the micro market, this is something which people are really concerned about, right? Because as people now have the Aadhaar card, now everyone has a bank account, now everyone's got a payment bank, suddenly they've gone from being very digitally kind of naive to being very digitally complex in literally a year or two, and they have
Yes.
they don't know,
Yeah.
they're not familiar with email phishing, they're not familiar with what viruses you get on public Wi-Fi, they're not, and these things are happening, and so people are worried about this, like what happens if my savings gets wiped out because I pick up a virus, so I think those kind of products are going to be kind of very, very popular.
I think this is. I have also observed that a lot of embedded insurance in travel is also gaining quite a bit of traction.
Yeah, yeah, absolutely.
Small microinsurance like insure your flight, insure your baggages, sort of the
Absolutely,
micro
and,
embedded
and, and they're
insurance
all
that they
embedded,
provide
right?
with their, yes, that is
Yeah,
also
so it's
being on the
embedded. So
rise.
like, when you take this
Yeah.
bus journey, when you take this train journey, all of those kind of things. Yeah, they're very much, that's the way to go.
Right. Right.
Yeah.
Okay. I think we have reached the last question. What are the popular micro insurance schemes that are prevalent in the UK? How has digitization of these schemes helped popularize them? Okay. This
So
is a
so first off, there's no poor people in the UK, right? So even everyone in the country that I live in, if you don't have a job, the government even gives you money and a house. So there's no particularly poor
right.
people. Of course, there's inequality, right? There's very wealthy people, and then there's people that are much poorer. So
Yeah.
there's inequality, definitely. But
Mm-hmm.
there is no one in this country who could be kind of classified as abjectly poor. So in the UK,
Right.
microinsurance actually means short distance or short duration. It doesn't mean for low income people. What it means
Okay.
is, so I want to have an insurance just for one day, so I can borrow my friend's car. I can have insurance for one day, so I can drive his car, and if I have an accident, then it's covered. Or some of the popular microinsurance in this country is we work a lot with kind of food delivery companies. So, if you imagine like Uber Eats, or I
Okay.
can't remember what you have in India,
Mm-hmm.
Food Panda or whoever, but like,
Zomato.
so if the
Yeah.
food is late or the food is wrong, then the food is free. This is a very popular
Mm-hmm.
microinsurance. So
Okay.
if you order from this one company, if the food takes more than 30 minutes, then it's free, and that's actually provided in insurance. And this is entirely digitized, so much so that you don't even have to make a
Okay.
claim. So you don't even have to ask for the claim. What
Mm-hmm.
happens is that we just get the data, we see that the food was late to Ankan, and we send a text message saying, Ankan, sorry that the food was late, we've refunded the money to your account.
Yeah.
You don't even have to ask for the money, it's automatically done. So we've gone as far as actually, it's what's called it's a parametric insurance. So you don't even have to ask for the claim. It's entirely data driven, and so this is, and some of these, it's really interesting. We've learned this from working in India, and we're deploying this in the UK. So actually, it's not a case where the so-called developed nations are leading the way. No, this is actually where we've learned things from countries like India, like other countries in Africa and Asia, and we're bringing those lessons into the UK and deploying those lessons and that technology that we've learned to actually unlock new markets here in the UK.
I think Domino's popularized this thing in India like vastly. If you're 30 minutes late, more than 30 minutes late, the food is free.
Yeah. Yeah.
That was the, I think, the oldest thing that I can recall that started off. I think this is a very interesting. I'm hoping that it comes to India as well.
Yeah, well, we'd love to do that. I mean, we'd love to do those products in India, as well.
Yeah. I think we have touched upon all the questions from the audience, Richard. It was a very, very engaging and exceptionally insightful session.
No
We are
problem.
very, very lucky and very, very pleased to have you today. It was a
It's been
absolute
my pleasure. Thank you for having me. It's been
Thank you, Richard.
it's been good fun. Yeah.
Absolute fun. Thank you, Richard.
Have a good
Have
day.
a nice day ahead.